Hey, good morning, everyone. Hey, quick video to go over the newsletter summary. Also, going to share a few things I'm seeing in the market. Today's going to be a phenomenal day. It's March 4th, 2025. The market's green. We're coming into refi city, and I couldn't be more excited. Let me go ahead and share my screen here and let's take a look at the charts. So we're popping through this area of resistance. If we hold this position, I think we've got a lot more room to go in this rally. Of course, we'll probably see a pullback. We always do. This will probably flag up here and have a pop and then pull back, and then we'll start to go test this next high. But I mean, you remember what it was like back here in September, leading up into this peak up here. I mean, it was wild, right? Refis left and right. So we're getting into that zone. Everybody that's purchased in your pipeline here is now getting into a spot where they can start to refinance probably today. You guys are probably going through your pipeline right now and already starting to tee these things up. What I'm hearing work well for us and others is also setting the target rate for folks. So, setting the rate that they are interested in taking to lock, so you don't have to keep checking in with them. And if anything, you can lock it lower than whatever you guys discussed on the phone. Say you're talking 6.75 and rates move down to 6.5, you lock it up. That's a great phone call to have. So it makes management of your pipeline a lot easier. So I think this rally has some legs. Again, we're all watching it. We need a a few more sets of good economic data and watch out. So yeah, start calling your pipeline and get that prepped. Hey, something else I want to point out. We were looking at we don't look at arms much anymore because of the yield spread inversion, but I every now and then I pull them up just out of curiosity to see what we got cooking over there. I saw something interesting last night. 599 on a 30 year, you could pick up, you'd have to pay a point. It was at par 599, but 599 over here was paying a point on that 7 year arm. And I thought, man, I don't look at these things as often as I should. So just a reminder, when you're pricing these things out, check out the arm, the 5, the 7, the 10. You may have those pockets of time where it works. Now, I checked it again this morning just out of curiosity. It's not a point spread difference, about a half point now, but it still can make sense. It's still some borrowers might go for this with the expectation that, hey, rate's going to drop even further from here. We expect them to land somewhere in the mid fours to fives. And when that time comes, we'll just refi you again, right? There's no you can do this in a limited amount of times, chasing the bottom. So I just thought that was interesting. Quick view of the product mortgage maker here. So we build out loan comparisons in this tool and share them with clients. What's unique about this is a client can add as they're searching, they can add additional columns and you kind of get insights into what the client's thinking and what they're looking for, right? This particular one was added and we're showing 15% down. So this triggers us to then call the client, just say, hey, just checking in with you. I saw you were building some reports. Are you interested in looking in some lower down payment options? And the same thing is true with all of this. We also build in property tax data. So we auto pull this in. So you enter a property address and everything you need to build the report is done. Homeowner insurance estimate, HOA dues. We pull in a supplemental property tax bill for California. It's a Cali thing. Um, long-term investment numbers, long-term investment numbers, property tax advantage of homeownership to show them what they could be saving in their taxes per year, broken out by month, and so much more. So if you guys haven't checked this out, get in here, check it out. It's packed full of all kinds of good stuff. So, hey, let's go ahead and jump into this week's newsletter. So, we talked about this current administration putting greater focus on bringing down interest rates. We talked about tariffs and there being more of a scare tactic and negotiation tool. We talked about CFPB. It's still uncertain what's going to happen there. We're all tracking that closely. We talked about fraud on the rise. So sometimes this gets forgotten, and it's worth bringing up again that it, when a borrower opens escrow, they have their EMD they send over to escrow, but they then have the closing funds that get sent over a few weeks later. And we've seen fraud cases, not us personally, but we've heard from colleagues where someone will get a hold of the transaction and the borrower info, and they'll send a false set of wire instructions to the borrower, a week or two before close, and then the borrower will send it to the hacker's address and their bank account, and it's gone after the money transfers. After a few 2 or 3 days, the money's gone. And And then the real wire instructions come and they're like, oh shit, now they're in a tight spot and they can't get the money back. They have to lose the house and close the transaction. They've lost all this money. So it's easy for us to all just communicate to the borrower that, hey, be careful. Always pick up the phone and call escrow. Save their number in your phone, and don't assume anything. Just always pick up the phone, even if you think you have the same set that you sent the EMD with. Uh, Still make that phone call. So this is just giving everybody a reminder of this because it's easy for us to get as we get into the flow. I think this week, Friday is going to be the day everybody's watching. We got Fed speak, non-farm payrolls, and unemployment that's coming out. We just need a few good sets of data to come in to really just watch this market explode. I mean, you can see the cues, and I think this is what's leading the bond rally right now is a repositioning of risk. The stock market's selling off, and traders are moving into more safety, which is great for interest rates. But when we see some negative economic news come out, watch out. I think that's really when we see that move up here to test this recent resistance point on the chart on the 30-year. All right, guys. Hope you're having a great start to your day. Take care. Talk soon. Bye.